Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Today is February 3rd, 2026. And before we dive in today, standard disclaimer, nothing here is investment advice. Do your own due diligence. My guest today is the CEO of Dolly Varden Silver, a mineral exploration company focused on advancing its 100% held Kitsault Valley project located in the Golden Triangle of British Columbia. It's Shawn Khunkhun. Always love having you on the show, my friend.
Jesse, it's good to see you. It was really great to see you in Vancouver. I'm just really impressed with yourself and some of the other hosts. You guys are doing a great job. You're great ambassadors for the space and are just doing a wonderful service for all those who are tuning in.
Well, thank you. I really appreciate that. I want to kick things off by discussing the large correction that we experienced in the silver market the last trading day of last week. We saw a 26% drop in the silver price, gold also correcting around 10%. Now, we've seen quite a strong recovery. We're sitting at around $85 from here. We saw further downside, of course, on the Monday, yesterday, and a strong comeback, it seems, at the moment. But if you could speculate for us, what do you think caused that massive single day drop and then the continued correction yesterday?
Yeah, great question. Look, it was one of the single biggest day declines in the history of silver. So it's something that it is good that we're talking about it. We're highlighting it. Look, we were just as it was an unprecedented decline, we were on an unprecedented run. And that run was really overheating the last 60 days. If we think back to where silver was less than a year ago, $25 in April of 2025. And then for it to go, what did it get up to, Jesse? 115?
Around 115, 116. Yeah.
Yeah. And so what we saw on Friday, I don't pretend to be a technician, but if you study some technical analysis and you look at an indicator like the full stochastics, it's really hard for anything to be overbought for more than 60 days. And what's really interesting about Friday was it was exactly on that 60-day mark from a relative strength indicator. So we were just, burning up a little too hot for too long. And it was a very, very healthy correction. Now, if we want to get into more specifics outside of the technicals, we can look at things like what the CME has done in terms of margin hikes. We could look at something like the over speculation, on margin with that momentum. And then the last thing I can look at is it's subtle, but from the Fed, there was a bit more of a hawkish move on. There was this, more of a strong dollar protection that came in with the new Fed chair nominee. And so I think if you add in those three factors, and if you look, I think gold was down almost 10% the same day.
Yeah.
And what we typically see with silver is it outperforms on the upside, but it does the same thing on the downside. So we're a few days removed from Friday's steep correction, and even though we saw lower lows going into Sunday night and continuing into Monday, what the action I'm seeing today reinforces that we are in stage two of this bull market. And in stage two is the stage where the corrections get bought and they don't last long.
Yeah, we also saw an interesting event occur at the CME COMEX, which is that there's supposed to be some triggers that activate once silver trades in a range of 10% on a rolling 1 hour basis, either up or down. And now, according to David Jensen, who has a great Substack on the silver market, he said that actually that did occur, I believe, between 12 and 1 p.m. on that day. Silver was range bound around 19%, and yet we never saw those circuit breakers activate. This has led, of course, to a lot of people theorizing that the COMEX itself could have been involved in allowing this to happen. I wonder what your thoughts are there, because there's so much talk of manipulation in the silver market. This is a hot topic. The bullion banks are trying to smash the price. And a lot of people come out with some very compelling evidence about that, including Ed Steer, Mario Oneko, Andy Schechtman, and many others. I wonder what your thoughts are there. Do you think that manipulation could have been involved, price suppression, in trying to bring the price of silver down last Friday?
100%. And again, what I like to try to focus on is the big picture and sort of the structural demand fundamentals more than I do about manipulation, because I feel like um, I can't impact manipulation. Like you look at some of the whistleblowers that have come out, you look at some of the courageous work many in the community have done. Whether it was Ted Butler, whether it's Chris Marcus, and it's important to shed a light on what the games that are being played, so that what we're really trying to do, Jesse, is provide a service for those new investors who haven't studied history of silver. And so it's important to let them know that this is par for the course. You've got a whole financial system that is really an anti-precious metals system. And if you look at and you study the history of money and you study gold and silver's role in that, you'd understand that there is a motivation to suppress price. But again, that's bigger than me. What I'd like to continue to focus on is the reasons why I want to own gold and silver, and they're all still here today.
Yeah, that's a great summary. And I think ultimately the physical demand is really what's going to overwhelm the paper manipulation. Now, of course, the question that a lot of people are asking in their mind is, when do we see triple digit silver again? This was almost a myth, triple digit silver, all throughout last year. People were talking about it. Most people dismissed it as a silver bug fantasy. And we ran to 115, 116 faster than I think even the most staunch silver advocates expected. Do you think we get back to triple digits this year? And what are the main catalysts here in 2026 that you think could drive us back to those levels?
I think it goes back to, I said it earlier, structural demand. I think the fact that industry is using silver puts a bid under the price. Phil Baker, in the work he's done with the Silver Institute, has highlighted a concept that he refers to as peak silver. And we've seen peak silver, and we're not anticipated to be producing more silver until the next decade, into the 2030s. So I think because of the demand and because we're not going to get the supply, you're going to see a bid underneath the silver market. But what I like to focus on, Jesse, is if you go back less than a year, okay, and if you look at the average silver miner, the average silver miner is all-in sustaining cost was about $20 per ounce. Okay, so there was a $5 spread in April of 2025. You had $25 silver. For every ounce you're selling, you're making $5. So let's take a big producer. Let's take a company that was producing 10 million ounces of silver. Companies like First Majestic produce 30 million ounces of silver. So, but I'm just going to use a round number, 10 million ounces, $5 spread. That's $50 million. If we take today's price at $85, right, that miner isn't making $50 million. They're making $650 million. That's a 1,200% increase in profitability and in cash flow. And that's where I really think that, silver's done phenomenal, but these mining equities have yet to reflect what we've already seen in the price of silver.
Yeah, that's exactly true. And that dovetails perfectly into my next question, which is about the silver mining equities. Rick Rule was on the show recently. He talked about selling his physical silver, 80% of it, and rotating much of that capital into silver mining stocks. He mentioned it again, the VRIC, spoke to several other people. We had a silver panel there, Peter Kraut, Peter Spina, also very bullish on the silver mining sector as perhaps the next area of the space that's going to outperform here in 2026. Do you see that as well? Because you're right. Over the course of 2025, we didn't see the silver miners provide much of that levered play on the silver price. In fact, by the end of 2025 and into early 2026, as silver went into triple digits, the SIL ETF on a percentage gain basis, actually silver outperformed it for a moment in time, which is really unusual considering the value of those ounces in the ground and that production when it comes to the producers. So how do you see the silver mining sector playing out here in 2026, given all of that?
So if you go back to the last great bull market for the precious metals miners, you take that early 2000 period, call it 2002 to about 2011. And if you study what the price of silver did, silver went up about 300%. But if you take a really high quality silver miner like Pan American, Pan American was up 1,500%. So on average, the average silver miner, it may not do as well as Pan American and outperform by 5x, but the average silver miner will 3x the price of silver. Now, is that what we saw in 2025? No. As you highlighted, silver was up 300%, but the SILJ, barely kept pace with that. Actually, it didn't even, right? It was up maybe 200%. So, and I think if you ask yourself why, the why is the analysts and those who are running money are looking at a price through a rear view lens. They're looking at a $35 or $40 silver price. Now, when are they going to change? In the middle of this month, some of the big mining companies are going to start putting out their earnings. And I think what we're going to see is what I demonstrated in that example of the 10 million ounce a year producer who's making 1,200% more than they were making in Q1 or Q2 of 2025. And so you can't ignore that cash flow. And so when that occurs, I think 2026, and I think Rick Rule, you don't have to look any further. One of the greatest speculators ever in the resource sector, follow Rick's lead. He has left the bullion, he's left the trade on physical for the leverage in the miners. And he's doing that, I think, at a perfect time. And if you want to look at some precedent, go and study the price of gold and how the price of gold has moved from 2019 at $1,300 to the recent highs of 5,500, and look at how the gold miners lagged that move, and look at companies that you could have bought, like Agnico Eagle, for $40 that have gone to $300. And again, they're still lagging because they're looking at a $3,500 gold price, but they've seen some appreciation. And because silver lags gold, the silver miners also lag the gold miners.
That's a great point. And I want to talk about gold for a second here as well. Obviously, as we touched on earlier, not falling quite as dramatically. I have some interesting anecdotal evidence from Japan. My mother-in-law there yesterday went to go buy some gold at one of the largest bullion dealers in Tokyo. She went an hour before the store opened. There was around 200 people already lined up. They were giving out tickets, entry tickets to a certain amount of people. She wasn't even able to get into the shop. Today, just before we got on this interview, I was speaking to a bullion dealer in Ontario. He told me yesterday for the entire day, there was 50 to 60 people lined up out the door to buy gold, as well as, of course, silver. So when it comes to retail buying out there, obviously Asia much stronger than the West, but I've heard stories from Australia as well, Vietnam. It seems like retail participation in bullion is picking up. I wonder what your thoughts are there and just the tailwinds you see driving gold specifically this year.
Yeah. So look, I believe that things are worse than governments have let on. Ultimately, we're totally bankrupt here in most of the world, right? From a sovereign level. And, what people are trying to do, people are waking up to the fact that they need to protect themselves. And, because of ancient societies in China, in India, in other parts of the world, and because of some recent history in places like Germany and Switzerland. Some of those nations have beaten us to the bullion, right? And we've been in this really calm utopia where there hasn't been any major conflicts that we were dragged into on our shores, and I think because of that, we've been lulled into this false sense of security. But we're starting to see the cracks. And the tailwinds for gold for me is as we move into an economy that starts to show signs of recession. I think what our politicians are going to do are they're going to do what they did in every crisis from 2020 back to 2008, back to 2001. They are going to lower rates and they're going to print money. And when they do that, investors, because gold is so structurally unowned, people may take this anecdotal evidence of people lining up at shops saying, this is the peak, this is the top. But if you look at how underowned gold and silver are relative to all these other assets, it's not. This is just actually the beginning. And look, I think I've tried to emulate people like Rick Rule. So I've tried to be early. I've tried to be a contrarian. So, am I running out and buying and putting all of my net worth into gold today? No, right? Because I do see something that has appreciated from $1,000 in 2016 to the $5,000 it is today. So I do think there's better value for me to speculate. It's better value for me to go and speculate on ounces that are in the ground, that are in a mining equity, that aren't seeing that I could buy ounces today for $10, $20 an ounce versus 5,000. And so I have the skill set to be able to identify those opportunities, and I want to enjoy that leverage. But to answer your question, I think 2026, and I really think for the end of this decade, gold and silver are going to be very, very topical. What you're starting to see is a small rotation out of the S&P, out of other asset classes, and they're starting to move into gold and silver, and some who are very, very early are coming into copper. But ultimately, they're totally underowned, and the world needs them more than they ever have because of the indebtedness and because of some of the instability, insecurity, and because of some of the policies. You don't have to look any further to the U.S.'s response to Russia in 2022, seizing bank accounts and taking some players out of the global banking system.
Well, Dolly Varden is going to be merging with Contango Ore. I spoke to both yourself and the CEO of that company in December about the proposed merger between the two companies. Could you provide us with an update on how that's moving forward and when we can expect the combined company to be listed?
Sure. So, we did announce on December 8th the proposed merger. And on March 17th, our shareholders are going to vote for that proposed merger. And, we suspect that by the last few days of March, within about a week of that vote, the merger will have been completed. And really, Jesse, what we're doing here is we're creating a company that's got production, development, and exploration. It's a company that's focused on high grade silver and gold in a safe jurisdiction. And, the only company that exists that's like it is Hecla Mining, which is valued at about $20 billion. So we're coming out of the gate roughly at $1 billion valuation with cash flow, with money in the bank. But most importantly, the toughest thing in our industry is putting the gold and the silver in the ground. And we've got 4 districts, 4 incredible projects, 1 producing, 1 soon to be producing, and 2 in the development pipeline. So I think it's, for me, it is a company that's going to attract a lot more. We've already got a significant amount of institutional ownership, index ownership, ETF ownership. But as you get bigger in the stock market, it attracts even more.
I also want to talk about some news coming out of Dolly Varden a couple of weeks ago. That is the drill results from Wolf Vein. I want to read a quote from you in the press release. You said, in addition to the successful infill and expansion of the Wolf Vein, the discovery of silver-bearing mineralization similar to the Torbit deposit is very significant in connecting the Wolf Vein with Torbit. Connecting the two largest silver deposits in the Kitsault Valley Trend has been a priority goal of our exploration team. So break that down for us. Walk us through the results in a little more detail and how they impact the overall plans for the project.
So for anybody new that's tuning in that may not be as familiar with the company, Dolly Varden has projects in Northwest British Columbia in Canada, in an area that's referred to as the Golden Triangle. So we've got 5 past producing high-grade silver mines under ownership. We own 100% of the projects. We're one of the largest claim holders. The only one that I can think of that's larger is Newmont, which is producing at Brucejack and Red Chris up there. So what does the news mean? We've got what was the richest silver mine in the British Empire. We have what was Canada's 3rd largest primary silver producer. And what we're finding is we're finding a mineral footprint that's expanding beyond the old mines. And so we've got this exciting new Wolf Vein that where we're finding Torbrit style mineralization in relation to the Wolf Vein. So, to simplify it, we're expanding, we're extending, and we're discovering new forms of mineralization. We've got a discovery that is 20 kilometers away from the main mine. And if you look at the core, and if you look at this, the dip, the plunge, all the characteristics, it tells me that, look, we're getting to a place where we're on the eve of putting out a new mineral resource estimate, and we're guiding it's going to show 100 million ounces of high-grade silver. We also have 1 million ounces of gold. And again, in the new Contango Silver and Gold, that's one of 4 projects. But what the new discoveries and this new mineralization is showing me is there's potential for a lot more than the 100 million ounces that we currently have.
Let's talk about the catalyst news flow coming up for 2026 out of Dolly Varden, and particularly related to the merger with Contango. I'd love to get your thoughts on just how you see that moving forward, and what catalysts that shareholders of the company can look forward to, both right now, leading up to the merger, and once it's complete.
So leading up to the merger, both companies have drill results that are pending. So Dolly's got results from the Homestake project, which is a few kilometers north of the silver. It's more of a gold system. So we've got results that are pending imminently from Homestake. And we've had some really, really strong results out of Homestake this year, last year. And then for Contango, they've started a drill program before Christmas at Lucky Shot. So Lucky Shot is in Alaska. It's a past producer. It's the next project in line to contribute to the production profile. So it's an extremely high-grade deposit. Its past production grades were measured in the ounces per ton. So it's an exceptional ore body. And so we got results coming from Homestake. Contango has results coming from Lucky Shot. We've got the vote coming in March. But then moving forward with about 70,000 meters of drilling, that exploration component or growth component of the company is going to be ongoing. And then again, as we move these projects through the development pipeline, there's some infrastructure improvements, road improvements as the next projects in line get ready for production. And then you've got the cash flow numbers that are going to come out of Manh Choh. And in 2025, Manh Choh made Contango shareholders $102 million of free cash flow. And if you look at the average gold price in 2025, I think it was something like, it was in and around 3,000. So we're in a different gold price environment. Production's going well. And so it's a really interesting company in that it's got cash flow, it's got pipeline, it's got growth, it's in a safe jurisdiction, and it literally has some of the highest grade mines that are operating today.
Well, I'll end by opening the floor to you as always. Is there anything we haven't yet discussed or anything you think it's important to emphasize that potential shareholders of Dolly Varden Silver should be focused on?
I think for all investors, look, for anybody who's been around the space for a while, you've endured a 10-year bear market. And that bear market has conditioned you to freak out when you have a day like Friday, where you think, oh, that's it, it's over, and you throw in the towel and you walk away. And I'll tell you, if you focus on the fundamentals, if you focus on the supply and demand, and you focus on all the challenges this world has today, gold and silver have a significant role and will be relevant. So keep that in mind. And that's why the evidence of these corrections being bought, and again, leaving the bullion aside, the equities have lagged. And so the real opportunity here, like the time machine opportunity for the investor, is buying the equities. And it's going to be a rocky ride. There's a lot of volatility. So my only advice is keep a steady hand and do your homework, meet the management team, stay focused on quality. But I think there's a really exciting opportunity. And what's great about it, unlike the low on the metals, which was, almost a decade ago now, the equities in this next phase, you're not going to have to wait a long time before they get revalued. So I think there's a huge opportunity. The venture exchange, the exchange where a lot of these Canadian listed companies trade on, is trading at 30% of the value of its old high. So right across the board for the 1,000 listed issuers, I think there's a tripling. And so you're going to have some companies that go up 20, 30, 50 times, others that'll double. I think it's going to be some that'll fail. But I think it's going to be a very, very exciting time for precious and rewarding for precious metals investors.
Excellent conversation, Shawn. I'm going to put a link in the description below to the Dolly Varden website as well as social media profile so people can follow along with the company. As always, fantastic conversation. Thank you for coming on the show.
Thanks for having me, Jesse. Good to see you.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.